Hello traders and welcome to another video review. Today is Tuesday, November 14th, 2023. Let's find out what's going on the Forex economic calendar today. As you can see, we got data from the UK scheduled for release at 8 o'clock, so it was already posted. And what do we have here? We got unemployment rate, which is dropping to the level of 4.2%. The forecast was 4.3%, so we stay in the same level as the previous month. The employment change on the quarterly measurement is 54,000, which is a very big surprise for the market participants because they expected minus 200,000 almost. Climate count change is 17,000 over, which beats the expectations of 15,000, and the average earnings index plus bonus is 7.9%, which beats the expectations of 7.4%. Very nice bunch of data from the UK. We'll definitely take a look at the British pound today. We got the German Buba Mauderer speech at 8:45. Then FOMC member William will give a speech at 9 o'clock. Then we got the speeches from the ECB Lane, ECB Enria, and at 10 o'clock we got the IEA monthly report. Economic sentiment from the Eurozone together with the GDP of the Eurozone is scheduled for release at 11 o'clock, and the German current condition and the ZEW economic sentiment is scheduled for release at 11 o'clock as well. 15 minutes after the 2 o'clock, we got the ECB Elderson to give a speech. Plenty of speeches from the Eurozone officials because there's Eurozone meeting as well today, which is why the remarks might have some impact on the Forex market. And then we start the New York session. Core CPI and the CPI data are the key event of today. Those data are scheduled at 2:30 from the USA, and the market participants expect the CPI to drop from 0.4% to 0.1%, and the yearly measure dropped from 3.7% to 3.3%, which is very high. Those are very high expectations. Anyway, 15 minutes later, we got the Bank of England MPC member Peel to give a speech. Then, after the New York Stock Exchange is closed, 30 minutes after 10 we got the API weekly crude oil stock data, and at the end of the day electronic card retail sales from the New Zealand. So the key event of today is of course the core CPI data from the US and the GDP from the Eurozone. Let's take a look now first on the reaction of the market to the data from the UK. For our chart of the British pound is showing us a spike to the upside towards the level of, let me just take a look, towards the level of 50% of the Fibonacci retracement at 1.2307. This retracement is of course the retracement of the last wave down from the highs of 1.2427 to the lows of 1.2186. As you can see, that low was ended in a hammer candlestick pattern, which means that the pullback is now in progress. We might see the level of 1.2307 to be tested soon because the recent spike to the upside has ended only 8 pips away from the 50% Fibonacci retracement. Very nice level for the bears to enter the market and make a pressure on the bulls. As we can see, for now it's not happening because the momentum is still positive. It starts to become quite strong because it's 58 points right now, so almost 60. If we have a breakout above 50 the percent of the Fibonacci retracement, then the momentum should spike above the level of 60, which means momentum will be strong and positive. There is still room to the upside. There is still room to the upside here. So after this very nice bounce from this trend line support, the internal trend line support, we should expect a continuation of the bounce. The question is whether this movement to the downside is the wave 1 or A, or this counter trend movement to the upside is the wave 2 or B. So the higher we go, the probability of the continuation to the upside is basically bigger. So please keep an eye on the British pound to US dollar. Let's find out what is going on the British pound to the Japanese yen. We haven't seen this market for quite some time. Let me just switch to the daily time frame chart and zoom out. As we can see, the uptrend is still in progress, at least from this big consolidation of the 2022, and right now, as you can see, we are trading higher. So let me just zoom in order to take a look at this part of the chart. Why? Because you can clearly see that what we have here is a technical resistance, and it's an important technical resistance made after the swing high located at 186.74. Then of course we got this technical support after the pin bar low was made at 178.13. So those are very important technical levels, both support and resistance. One more technical support can be shown here at 176.30. So that's the levels that we want to pay a particular attention to. Now we got the trend line from the lows of the technical support a little bit higher. So this is the internal trend line, short-term trend line as well. And now we can clearly see that the market keeps trading above 50 and 100 periods moving average. Very nice movement to the upside. The internal trend line here had been violated already. All right, so that was the trend line here, somewhere, something like this, violated. Then we got some period of the adjustment and then breakout to the upside, and it's clear as the sun that the market wants to go higher and test the highs from the 23rd August 2023. So this is the August, September, October, November, basically almost 3 months old. This high is almost 3 months old. The momentum remains positive. The momentum remains strong. There is slight of a room to the upside. There is a room to the upside here as well. So the outlook is still bullish on the British pound to Japanese yen. Let me just now concentrate on one more market, which is the US dollar index. This is a daily time frame chart as well. I'm showing you this because there is a very particular situation here which needs our attention. We got this technical resistance that was violated already, but now because of the another breakout to the downside, we will label it as the resistance as well, and we will copy this line and place it on this recent swing high, which is located at 107.32. Now the other technical support, the old one, is located at 104.67, and this technical support is a strong one. We need to label it correctly here. And as you can see, this technical support has been tested, broken, and then almost tested again, mostly because it's very close to the 100 periods moving average. We got the kind of a pin bar at the top of the rally at 107.32. Then we have a pullback, attempt to rally, another pullback. So we got A, B, C. So this is the current movement in terms of the Elliott wave. So we start a correction. So we got wave A, wave B, let's say wave B, and wave C. Okay, then we of course have ABC to the upside and possibly ABC to the 5 wave to the downside. So on a bigger scale, in bigger cycle, it looks like this. The ABC correction might be done, and this is the irregular flat correction, which even has a name, so it's even better for us to correctly identify this very simple correction. Let me just take a look how much percentage we took during this correction. We apparently took roughly around 2.33%. So this correction here is the biggest correction during the uptrend for sure. So this correction is no longer a part of this movement. So if this is the wave 1 and it's ended at 107.32, this ABC correction might be considered wave 2 or wave B. We don't know it yet, but it looks like behind we got this long-term trend uptrend. Then we got the correction to the downside. Maybe this is the beginning of another trend to the upside. In order to confirm this, we need to pay particular attention to the current situation on the US dollar index, because we want to see very strong rebound and impulsive wave development to the upside if this is the wave 1 and ABC to the downside has been done. Any movement to the downside which is bigger than, let me just take my price range, which is bigger than 4.89%, basically bigger than 5%, invalidates the impulsive scenario to the upside, and any sort of the further, let's say, horizontal trend, whipsaw mode trading, up and down, oscillator, without the US dollar index generating any sort of the impulsive wave progression to the upside, is as well bearish and would likely invalidate, all in all, would like to invalidate our current wave progression. Let me just label this wave progression that I mean. This is the wave 1. Okay, that's the wave 1. That's possibly wave 2 completed here. So we are waiting for wave 3, 4, and 5 to the upside. All right. Now the momentum is slightly negative. It went to the level of 50, but it was capped. We need a breakout above the 50 periods moving average, above the swing high, and it needs to be done in an impulsive manner. Otherwise, this scenario gets invalidated. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.